Welcome back. You're watching The Money Show with me, Kavita Thapliyal, and let's get on to our viewers. And to answer our viewers' questions today, I have with me Shweta Rajani from Anand Rathi Wealth Limited. Let's take our first viewer online, Shweta, Gautam. Gautam is on the phone line with us live. Hi, Gautam. Good evening. How are you doing?
I am fine, and I have already shared my portfolio.
Sure. Yeah, I'll just cross-check the name of the funds. You have Franklin Flexi Cap, HDFC Hybrid Fund, you have Kotak Flexi Cap, SBI Blue Chip, ICICI Balance Advantage, Axis ELSS, DSP Mid Cap, Parag Parikh Flexi Cap, Mira Asset Emerging Blue Chip. And your target is 3 crores after 15 years, 15 or 20 years duration, that's what you've given. And SIP is the mode of investment, and you want to know the choice of funds, and you have rest of your investments in PPF. You're also investing in NPS and Sukanya Samriddhi Yojana as well. You also have Atal Pension Yojana. You've got term insurance for yourself, health insurance as well. LIC. What is this LIC policy?
LIC is in more than 5 lakhs.
Yeah, but then what's the policy name?
Jeevan Anand.
Jeevan Anand. And what's the policy duration?
Policy is 20 years.
20 years.
Usually mature, there are 3 policies. One policy is mature in 2024, and another 2 are 2032 and 35.
One is maturing in 24, one in 32, and one in 35.
Yeah.
And what's the sum assured attached to it?
1 lakh each.
1 lakh each.
Yeah.
All right. So let's get this sorted for you, and let's see if the funds that you have selected would actually help you in achieving your financial goals. So Shweta, let's talk about the funds. Is he over diversified?
Yeah, Kavita. So in terms of diversification, no, I think to my mind, anywhere having 12 to 14 funds in your portfolio is good enough. I'll not call that as over diversification. But coming to his funds, just certain comments that I would have is Gautam, you have hybrid funds in your portfolio, and I was going through the portfolio. What you have in terms of your SIPs that you're doing, as well as the debt in terms of PPF, Sukanya, Samriddhi, you're somewhere around a 60-40 mix, 60% towards equity and 40% towards debt. Considering you have a time period which is 15 to 20 years, you can potentially go up to a 70-75% equity. In a hybrid fund, you would have the fund manager doing asset mix for you, which is both equity and debt, which you don't need. What you need right now is more of equity in the portfolio. So that is one thing that you can definitely avoid in the portfolio. Second, schemes like Kotak Flexi Cap, which have somewhere a size disadvantage to themselves. That again is one SIP I would suggest you to stop. Few other schemes which, there are better funds available in the peer group. So stop for a DSP mid cap, stop a Franklin Flexi Cap. Instead of a DSP mid cap, you can go in for a DSP equity opportunities. You can also go in for funds like ICICI Pru Focus Equity, SBI Contra. That would help you bring in some diversification. Also, what I would suggest is one small cap fund, additionally, an Aditya Birla small cap fund. These are the fund level changes. You are doing certain things which are very good. You've got a term plan, you've got a medical insurance, and the way you're doing your SIP, your 18,000 per month will help you get to your objective of 3 crores. Plus the debt investments that you're doing could take you up to an additional 1 crore. So, in terms of your goal achievement, you are well placed, but you need to bring in some efficiency in the funds that I just mentioned.
Shweta, you want to suggest him for his LIC policy? See, 2024, you can't do much. 32 and 35, what do you think should be his strategy? Can it be made up into a paid up? Because 1 lakh each is what he's paying every year.
Yeah, so honestly, on that, I don't think it would be worthwhile for you to continue, because the policy that you just mentioned, I've seen it for a few other investors as well. In terms of the return, the rate of return that you would end up making would not be so significant. You'd end up with somewhere around maybe a 6% or less than that return. So you just go back and check what your premium paying term is. If your premium paying term, the bare minimum required, is over, then stop paying further premium into it. And if you give us more details, we can check, or you can go back to your insurance advisor and just see if you have to exit today. Is it possible, and at what cost? So you may want to evaluate that decision too. That you may want to, have a pre-closure to it. But definitely your premium paying term, if that minimum period is over, then you must stop that.
What Gautam should do is just send us his insurance queries once again. But apart from that, we hope that your investment queries are answered, Gautam. We move on, Shweta. We have Markan on the phone line with us. Hi, good evening. How are you doing? Thank you so much for sending us your question.
Hi, good evening. Good evening to all.
Okay, so I think we have the name of your funds. I just want to understand for how long you want to be invested in this portfolio.
At least 15 to 20 years.
And you are investing since?
Last 3 years.
Last 3 years. Any specific corpus that you want to accumulate through this portfolio?
No, there is no specific.
Okay, so wealth creation is a goal.
Yeah.
Okay. And you've got these funds from anyone recommended?
Yeah, there is a fund manager.
Okay.
Previously, so he recommended at that time.
All right. So are you still taking his services?
No, as of now, no.
Okay. So let's cross-check whatever he's recommended to you. Shweta, it's wealth creation and he's been investing since last years. I think he said 15 years, right? He wants to be invested in this portfolio. Yeah?
Yes.
Yeah. All right, Shweta, go ahead.
Okay. Markan, one thing that you've gone right is you've gone all equity. At least this is what I'm guessing, given the portfolio you've shared. Now, what happens is, every fund goes through its cycle. So you can't just invest in it and forget about it. You need to regularly review it. Right at this point of time, what I am seeing in your portfolio, something which is good, is you have the small cap allocation, and this year has been a small cap year. Even the year, except the previous year, the year prior to that was also a small cap year. So you've benefited from that cycle of small cap playing out. But what's going wrong for you right now is you have a lot of these international funds in the portfolio. Some of them are, within international, also sector specific. So you have US technology, you have Greater China, a lot of that. Right now, the situation, and it's been so for the last few quarters, is India's far better placed than these global economies. Whether it's economic growth, corporate profitability, valuations, all of which is favoring India. And that's likely to continue and benefit your portfolio for the next few years. So one change that I would suggest is all of those funds that you have, and you had 4-5 of them in your portfolio out of the 13 schemes. You must stop your SIP there, and whatever you can exit, you exit. Apart from that, you have small, add large and mid cap to your portfolio. So some recommendation: ICICI Pru small, large and mid, SBI large and mid would be some of those recommendations.
All right. I think with that, we are done with the time today. Thank you so much, Markan, for sending us your question. And thank you so much, Shweta, for being on the show and helping our viewers with every aspect of the financial planning today. It's a wrap on The Money Show, but I'm going to leave you with our WhatsApp number and our email ID where we keep waiting for your queries. Thank you so much for watching. Goodbye.